that you can give to the listeners that are wanting to break into real estate?
Yeah, I would say that, I'm certainly biased, but I think we both work in a fabulous industry. There is absolutely something for everyone in this business, and it's all about finding your lane. And I'm speaking to people who work on site as leasing agents, community managers, regional managers, people on the accounting side, asset manager, acquisitions, HR. There's just so much that goes into what are effectively these mini businesses, right? Each property is a mini business. So if
Yeah.
people are attracted to business and attracted to sales, marketing, strategy, there's something for everyone.
Yep. Very cool. Awesome. Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman. Today we're joined with Rob. Rob is the CEO and co-founder of Lone Star Capital, where he's led $600 million plus worth of multifamily deals. Best-selling author and podcast host himself. He also leads Lone Star's in-house management team and is a sought-after voice in the real estate industry. Rob, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Sure. Thanks, Josh, for having me. Yeah, so my business partner and I, we started Lone Star Capital 7 years ago. We're based here in New York City, but our portfolio is currently totally in Texas. So we're a very Texas-focused firm. We have about 700 million in assets across 5,000 apartment units, again, in Texas. And like you mentioned in the introduction, we're vertically integrated. So we have property management and construction management in-house. We're super hands-on. Just got finished with a hour-long team meeting, and we're getting into the nitty-gritty of operations. So it's been a super fun journey building out the company and everything. On the investor side, we've raised capital from high net worth individuals, family offices, private equity firms, and a lot of fund of funds, which is kind of super popular these days as well.
Got it. Very cool. So you had mentioned your business partner because you're the face of the company. So who's the man behind the scenes, the other person?
His name's Ken Petrikovsky. So like I said, we started the company in 2018 together. At the time, I was 21 years old. I was still in college. He's 16, 17 years older, so he had more experience, better network, and so on. So we teamed up really well, complemented each other's skill sets, and we were able to kind of lean on each other. I was able to drop out of school. He left his high-paying corporate job, and we took the entrepreneurial plunge.
Got it. So did he have experience with multifamily assets, real estate, or two different totally industries, and just brought it all together?
More so the latter. He had a little bit more experience, a little bit more of a network, but it was definitely new for both of us.
Okay, cool, very good. And tell us about your first deal. Tell us about what it looked like and how you knew it was the one to start with.
Yeah, well, I would say it probably wasn't the first one to start with, but our first deal was a 261 unit asset in a pretty tough neighborhood of Houston. So we went big right off the bat. We bought a $15.4 million purchase, and the deal needed a lot of love. It needed work on the exterior, it needed work on the interior. We had crime issues that needed to be cleaned up. So it was a heavy lift project, which is why I think it was a bit of a mistake, because for various reasons, I don't think that's really the best fit for anyone's first project, especially when they're taking on outside capital. And the reason being for that is, one, you're talking just about a riskier deal, more challenge, more work, and a bigger learning curve. And with that, there's, again, with more risk, there's more things that can go wrong. And when you're talking about raising outside capital, especially on your first deal, you really want to deliver consistency for your investors to keep them comfortable, excited, and motivated to continue to partner with you. The issue that we had is that we kind of threw ourselves into the deep end with this deal, had a ton of challenges, had to spend a lot of time and effort really turning around the property, making it perform well. And that kind of set a longer clock, if you will, for investors to kind of sit back, evaluate the situation, and really decide, okay, is this going to work out? Do I want to invest with these guys again? So if I were to do it over again, I would for sure pick a smaller deal so that the deal is less risky from a capital raise standpoint. The worst thing you could ever do, in my opinion, would be to put a deal under contract, go to raise the money, fail to raise the money. Now you have to return that money back to investors and say, sorry, no deal. And then also you're going to have reputational damage in the brokerage industry. You're going to have costs that are you're going to have sunk costs basically in pursuit of that deal, and you're not back to square one, you're back to square negative one.
Yeah.
So I think you want to have a deal that you have confidence in closing. So maybe obviously go big, you want to be aggressive, you want to be an entrepreneur, but not too big. And then definitely you want something that's more of like a base hit, more stable, more of a sure thing, that you can really kind of show proof of and show that it's working right off the bat, so investors are excited and ready to do the next deal, so you can more stably grow your portfolio.
And it's a confidence booster too. If you get out of the gate, something new, and it's a success, now you've got confidence to go out there and do it again. What did your team look like on the first deal?
So I think it's a really good question, because no matter whether it's your first deal or your 100th deal, team is super important. And when it is your first deal, you likely don't have much of an in-house team at all. It might just be you,
Yep.
right? Whoever is listening. And so no, never mind whether you have a one-person team or a 100-person team, you always need to have a fully built out team. So on our first deal, we made sure to have a loan guarantor, which is just a necessity. You're going to need a property management company, because it's unlikely that you're going to have your own management company built out or anything by that point. And you're probably going to want to utilize experts such as a loan broker, right? So and we use a debt broker to this day, so we kind of lean on the experts to do the best for us. And we also, on the first deal, as today, we partnered with a lot of people who helped raise the capital. So co-GP partners who have a big, deep investor network, or today, more popularly, fund managers who are basically boutique capital raisers. They have a network of investors. They put together a special purpose vehicle and then pool together, $1 to $5 million into that vehicle. And then that vehicle becomes an investor in the deal. And so we partner with a lot of fund managers like that. So that's critical, right? Especially when you're getting started, you don't have your own investor relationships to the point you'd probably want.
Yeah, that's getting definitely more sophisticated. And then as you build your experience, now you can build your capital stack in different ways. When you were going through each unit, doing your due diligence on your first deal, you get a trained eye as you get experience, of course. And that's what we call wisdom. What were your thoughts going through each unit, and then what were your thoughts after you closed? Initially, what was going through your head? Because it's a lot. I mean, your first deal is a lot.
Yeah, everywhere you turn, it's a learning experience. So it's from due diligence, it's from the takeover, it's from the financing, it's the partnerships, 100%. So, I mean, as far as unit walks, I think unit walks are a pretty straightforward process. You really just want to confirm your assumptions from the outset, because you used a certain set of assumptions to derive your underwriting and therefore your offer to the seller. And so you're getting that information from the broker, from a more like high level tour, information that's provided from the seller. And so from all that, you put together your assumptions, and your assumptions might be, okay, let's just keep it simple and say, let's say half the units have been renovated to this scope. The other units are in this classic condition. And you've got rough ideas in your head. Now, of course, every individual unit might have varying degrees of flooring condition, appliance condition, countertops, cabinets, right? And so you need to go unit by unit and actually get granular. But at a high level, you use certain assumptions, and you thought, okay, half the units we're going to renovate to the existing renovation finish. We think that's going to cost $10,000. And then you put together your rough outline budget. Then the individual unit walks allow you to go granular and determine whether that initial assumption of, let's say, 10,000 per unit for half the units is actually accurate. And hopefully, hopefully it all checks out, and hopefully your initial assumptions, you've got some contingency, you've got room, and everything works out. But if you go into those units and you see a dramatically different story than what was told to you, well, that might be your problem, but it's also their problem. And depending on how you've structured the negotiation as far as due diligence, earnest money deposits, non-refundable, refundable, terms and conditions, ideally you should be able to find that information that you got, or use that information that you got from those unit walks to negotiate a price discount, or a price adjustment. And I wouldn't consider that retrading, because you're adjusting their price or negotiating a new price based on new information, right? Retrading is considered a bad word in the industry and you don't want to get a reputation for it. But in my opinion, retrading is when you decide to just change your offer without really the introduction of any new information. So I think a lot
Yeah,
of
a
people,
week before closing, to where
yeah,
it's
and
holding that
that
deal hostage.
right, that'll get you a nasty reputation with the
Yeah.
seller, with the brokers, and that's certainly not anything we're looking to do. But when the rubber meets the road, there absolutely are situations where new information pops up that was totally out of the buyer's control, and I think that's a legitimate way to retrade. But and I don't know if this is necessarily the case today, but I know when I was getting into the industry in 2017, 2018, and then only as the market got hotter in 2020 and then culminating in 2022, new people in the industry were so scared, and it was such a seller's market that brokers had all buyers scared stiff about even mentioning the word retrade or talking about a price adjustment or anything of that sort. And I think maybe that's probably died down because the market's come down and it's a bit more of a buyer's market. But I would just advise anyone kind of that's new to not be afraid of that and to really stand your ground.
Yeah. Well, and it was to the point, the market was to the point where properties are selling based on what the property down the road is performing as. So it's on the purchase, you're essentially selling any equity, any upside that you would have achieved by getting the rents to where the property down the road is already getting. I mean, that's still out there, it's still happening, but you go into each unit, you find out their original vintage, a lot more CapEx cost, and you need a lot more money for renovations. And now it's time to circle the wagons, get around the table, and get the price to where it's realistic again. You had mentioned your first deal had high crime. We've done some heavy lifts over here on my end too, my team. Um, so that's why I mentioned walking in through each unit, because you can always tell who the bad actors are if you're doing diligence. And usually the bad actors will leave on their own because they see new management, new changes, new day, new them. What are some tactics that you've used to get out the bad actors?
Well, it's all about cameras, it's all about presence and lighting, right? Like you said, as soon as they know a new sheriff's in town, they are most likely going to opt to lead, right? Leave because
Yeah.
they want to live somewhere that's going to allow them to conduct their activity. And so it's just why stay in some place that's become hostile to their existence, right? So they can find a different place that might be more accommodating. So I think with the proper presence, that's going to change things around a lot. And then lighting and cameras are strong deterrences that go a long way.
Yeah, that's absolute. You can always just go and just tell the units. But and then after you purchase the property, that issue does still exist. It can be overwhelming, and you can have moments where you say to yourself, "What have I done?" But new new times, new management, and the right property manager. If you're doing it in house, you have the right team. I mean, you can make changes very quick. And that's it. Let's get into that. You all are vertically integrated. You're managing these properties on your own. I know you didn't start out like that, but what made you want to transition over? And then what is that? How has that bettered your operations?
Yeah, we made the transition, I think it was back in 2021. So we did it pretty early on. We had the vision. We knew that it was important to our business. We knew that investors wanted us to have that control so that we could be better operators. And the way I see it is, yeah, there's certainly good third party property managers out there that they're capable, right? They are certainly capable of doing a good job for you, and they've certainly have done good jobs for people, right? So it exists, but it's a lot of work no matter whether you're outsourcing the management or doing it in-house, right? If you're outsourcing it, then you're chasing them down and you're really being the squeaky wheel to get the grease so that your particular property of their portfolio of third-party contract assignments is getting the attention it deserves. And so to us, we just felt like controlling the whole process from hiring to culture to training to allocation of resources, it just makes so much more sense if we're really trying to build the right company over the long term. And so we're really looking at ourselves as an operations company that grows through acquisitions and not just some private equity firm that just buys deals to collect fees and then, be an AUM shop type of thing. So I think that is the big difference in the realization and kind of what we want. My long-term vision is I want to have a perfect portfolio of 50 properties that are all amazing that I have no interest in selling. That's the high level dream. And if
Yeah.
you have a dream like that, why would you have third party management look after your dream?
Yeah. Yeah, no, that's and being able to have a rapid response and control the process, communications not unbroken. I mean, you're relying on third party to hire the right people too, because they're putting in people in front of you, and the more diluted down the message gets. It's just, I think it becomes essential if you take your career serious about real estate and purchasing assets and taking on investor capital. I think that it becomes essential to also manage the assets and control the alignment. No one cares more than you, and that's just the way it is. It's the way it's always going to be. So you're going to make sure that those tenants pay their rent, um, not necessarily on time, but you're going to keep the pressure on there for them to keep paying. So I know we collect rents throughout the entire month, um, but we keep the pressure applied throughout the entire month too. We don't let it get too far to where now we're not only filing an eviction, but we're taking a huge loss. So those are the things that you can control internally versus relying on someone in front of you to put in place. Tell us about your construction process, the renovations, because you all have a large portfolio, and that's the worst part of the business. That's the armpit of the business is the renovations. It's most fragmented. How are you all controlling that?
Well, I would say that we're not a super programmatic value add owner, for generally speaking. So it's not like we're doing a ton of renovations at a bunch of properties in bulk all the time. So we are more kind of, especially in this environment, we're more cautious, more thoughtful. We take things more slowly when we're doing our renovations. So that gives us a bit more flexibility. But basically, everyone knows about construction. You've got three things, and you can generally, ideally, get two. Sometimes you get one or none, right? But those three things are cost, time, and quality, right? So if you want something done well and fast, it's not going to be cheap, right? If you want to do something cheap and well, it's going to be slow. And so we have our tools, we have different ways to accomplish things. So, for example, we had a roof repair at one of our properties recently, and we got a quote from a roofing company, right? So, a subcontractor for $30,000. And our in house construction team evaluated the situation, evaluated the quote, and we figured, okay, we could actually just buy the materials ourselves for maybe $1,500. And then for, let's say, a week's worth of work for two, three guys, maybe that's, I don't know, a few $1,000s in payroll costs. We can actually do the repair in house. So it might take actually a week or 2 weeks or something like that, rather than a subcontractor coming in and getting it done in a day. I'm just, using generalities for the most part, but that's kind of the concept. It's if it's not an emergency, we've got the bandwidth and there's actually savings, then we can do it in house. Now, this of course isn't for everything, right? Some things you're just better off bringing in an expert, like might be an electrician or a master plumber or something like that. But we're continually looking for ways where we can save the properties money by doing things in house while still being, I would say, cognizant of the downsides of that, which would be time, right? Like it's just simple math. Would you want to take forever to, let's say, renovate a unit so that it can get back on the market and leased up? Well, no, because you actually have an opportunity cost there. You could pay more money to get those units renovated and then leased up faster. So those are kind of the things that we do from an asset management and construction management, and actually not just construction management, but construction, like literally hammering the nails in perspective.
When you're getting ready to purchase a new asset, are you all going in with a capex budget?
Yeah, I would say there's always, of course, going to be some budget, but we don't, like I said, we don't look at every property as this big value add opportunity. So we look at the deal from a few different perspectives. One, we look at, of course, the property's condition, and we look at deferred maintenance. We look at the property's condition relative to its competitors, and that factors into the capex budget. Another thing we look at is what do we think we want to spend and do on an ongoing basis, right? Because we don't have to buy the deal and then do a ton of capex all up front in the first 6 months or 12 months of the deal. We can actually just budget out annual capital expenditures. Like, for example, if we know that the HVACs are dated and that historically speaking, there's been, let's say, one or two HVACs that are going out every month. Well, why go in and just replace 100 HVACs right at takeover. Why not just
Right.
nurse them along, repair them, and until they're finally not repairable, and then we replace. And we just do a replacement every month, every 2 months, whatever the schedule calls for. And we can just do that at a cash flow on an ongoing basis
Yeah.
rather than having this big budget up front and replacing what isn't broken.
Yeah. No, yeah, absolutely. We do the same thing. We'll go in with the CapEx budget, get typically the units are it's broken. The management's broken. The units need work. We're looking at heavy value add on our end, just build the equity on our own. You've got more. It sounds like stable assets go in. You have the coupons already in place, and it's just a baked in growth that you're looking year over year.
Yeah, that's correct.
Cool, very cool. What are some learning lessons that you can pass on to the listeners of some things that you wish you knew than what you know now?
Yeah, there's certainly a ton. I mean, it sounds like we've been talking a lot about operations, so I think we could maybe stick to operational learning lessons. I would say from an operations perspective, this sounds cliche, but you're only as good as your people, right? And that's what you mentioned earlier when it comes to third-party management, right? You might hire a third-party management company that has a fantastic name, like Greystar, for example. They're the largest apartment manager in the country. But, and I'm not saying anything negative about Greystar here, I'm just using their name as an example because they're the biggest. If you hire Greystar and they, let's say, hire Bob to be the community manager at the property, and then Bob is overseen by Susie, their worst regional manager, that your property is probably not going to do too well, even though it's managed by Greystar, right? Because it doesn't really matter what company. It's all about the individual people at the particular property. We have certain properties that are performing amazingly, and we have other properties that are not performing amazingly. And the differences, of course, are the on-site teams. So the most important people in your company are the on-site teams, from the community manager to the maintenance teams to the leasing agents that actually run the day-to-day operations of the property. And so you want to spend a lot of time and effort on recruiting and promoting and 100% retaining your talent at the on-site level. And the last thing that you want to do is skimp out on payroll costs and try to save money. And it's so easy to do this because you're just sitting behind a computer looking at a spreadsheet trying to find a way to buy your next deal. And the deal is listed for $20 million and you're trying to crunch the numbers and figure out how to make the numbers work. And it's so easy in your spreadsheet to say, you know what, well, we'll just shave payroll costs down by a few $100s per unit and that'll make the numbers work. But that's the worst place to cut costs. You want to invest in your payroll so that the property can flourish.
That's 100% accurate. We've had really both ways. It's people, people, people. Unfortunately, to grow anything, you have to have the right people. For those real estate investors that want to get into real estate, because you don't have to deal with people and all this other, it's just you need to be a passive investor and let the people on the front end deal with the people, toilets, termites, and all the nonsense in between. Um, Pivoting over to investors, what is your avatar for a fund manager? What are you looking for people to bring capital to your deals?
Yeah, our sweet spot are fund managers or capital raisers who have the consistent ability to raise, I would say, generally $1 to $4 million. And so we have great partners that are repeat partners. They may not invest on every single deal. We totally understand that they're looking to build a diversified investment strategy for themselves and their investors. And we're not a diversified investment. We're a specialized investment, right? We only currently invest in Texas multifamily assets. And so we totally get that they may not invest in every single deal, but we have a ton of repeat investors who invest on a lot of deals multiple times per year. And that's exactly our dream type of investor. We want a long-term partnership and someone that we can grow with, help them grow, help them raise more capital, be more successful in their business, and help us, of course, scale our portfolio.
What can fund managers? What's the process working with you all? Because I know you've got it built out pretty well as far as just a breakdown of exactly step by step.
Yeah, we partner with TribeVest as our back office fund manager partner. And so they really streamline the process of fund formation, the banking, the accounting, the K1s, the distributions, the portal. So we don't force that upon anyone, but we just have that in place. So if anyone shows up, raises their hand, wants to jump in, we kind of have a done for you model where they can just focus on what creates the most value for themselves in their business, which is, of course, their investor relationships and raising capital.
That's perfect. And then what's the process like for them to sign on directly?
Yeah, so our minimum investment is $50,000. We have other tiers that go up, which give preferential terms, but it's super easy for investors to head to our website, lscre.com, fill out the new investor form. Craig on our team will give them a call right away, lightning speed, get them onboarded. And then my sister Dasha is our director of investor relations, and she works with kind of the paperwork, the wires and things like that, and making sure people are comfortable, with what is a very big investment.
Yeah, I think Craig, he's come on the show. I didn't want to say it was like last year, but he's definitely good people, and that goes back to the people. You got to have people like Craig who are forward thinkers and can think on their own with minimum oversight to take care of business. Very cool. Is there any suggestions you can give to the listeners that are wanting to break into real estate?
Yeah, I would say that I'm certainly biased, but I think we both work in a fabulous industry. There is absolutely something for everyone in this business, and it's all about finding your lane. And I'm speaking to people who work on site as leasing agents, community managers, regional managers, people on the accounting side, asset manager, acquisitions, HR. There's just so much that goes into what are effectively these mini businesses, right? Each property is a mini business. So if
Yeah.
people are attracted to business and attracted to sales, marketing, strategy, there's something for everyone.
Yep. Very cool. Awesome. Awesome show. Rob, we definitely appreciate you coming on the show today. I look forward to following you and following your growth.
Yeah, thanks for having me on.
Thank you.